What's going on, guys, and welcome back to my channel. Today I want to talk about the massive M1 Finance haul that I did this week, which I'm very excited, and obviously I want to share with you guys whenever I do something that I'm very excited about. So basically, if you guys weren't aware, or if you guys were sleeping under a rock, the stock market and all the major indices like the S&P 500, the Nasdaq, the Dow Jones, and lots of stocks have taken a hit. There's just been so much volatility lately. Lots of talks about recessions and trade wars and all kinds of news. But I use that opportunity to add a lot more cash into my M1 Finance portfolio. In fact, I think over the past maybe couple of days, I've added maybe like $2,000 in cash to M1 Finance to take advantage of those dividend stocks. So let's go ahead and jump into my M1 Finance portfolio. So I went ahead and I filtered by my trading. So let's go ahead and take a look at what happened on August 6th. And my favorite part about the August 6th buy is that if we take a look at the S&P 500 on August 6th, let's go ahead and take a look at it on a daily time frame. August 6th was the bottom. And so, obviously we can still head lower. Something really nasty can happen. But let's say that this is the bottom and we start heading lower from here. Then that was just a really, really good bargain and a really good move on my part. We'll see if we can keep it going. But yeah, like I said, this is the bottom of this long drop that we had. The size of this drop was somewhere close to around 8%. And because M1 Finance does its purchases sometime in the morning, at least if you're in California, it should be close to around 9 a.m. Then that was actually even closer to the bottom. So let's go ahead and take a look at everything that I purchased. And like I said, most of it is dividend stocks, and most of these are stocks that increase their dividends every single year, with a few exceptions. So I really want to highlight some of the more bargains and value stocks, in my opinion. So yeah, let's go ahead and jump right into it. So Kellogg's actually isn't that much of a bargain right now. I mean, it's definitely below its all-time high, but over the past few weeks, we've actually seen a lot of bounce and a lot of recovery. And the main reason why I went long is because if we take a look at it from a really, really long-term perspective, we're getting really close to the 200-month moving average, also butting up against this trend line, which we've respected ever since 1999. Like, are you kidding me? Yes, please. If we get close to this, of course I'm going to buy that. So I went ahead and I did that. So my Kellogg's position is up 12% already. And so it's not that much money, but whenever I see a bargain, I'm going to go for it. And so that's exactly what I did for Kellogg's. So the other stock that I want to talk about is actually Target. So Target did take a little bit of a hit, not as much as Kellogg's obviously, but if we zoom into a daily time frame, we can see that around August 6th, we're actually maybe a few percent below the 52-week high. Like I said, isn't that much of a bargain, but Target's been really hard to get into lately, and so I was really happy to see this drop that we saw towards the beginning of August. Moving on to the next stock on the list is PFE, or Pfizer. So Pfizer is definitely a bargain in my opinion. I mean, just take a look at the size of this drop. All-time high sits close to around $46. Currently at around $36. That's at least a 20% drop, if not more. And Pfizer, if we take a look at it from a long-term perspective, let's zoom into a weekly time frame. As you guys can see, we are hovering around the 200-week moving average, and we've respected this trend line all throughout the rally ever since the 2008 recession. The quirky thing about Pfizer is that we're actually below the all-time highs, but for the most part, as far as the intermediate trend goes, I think it's now or never for Pfizer. Like, we're either going to bounce or we're going to see an entire change in stock market behavior and sentiment for Pfizer. So I went ahead and I purchased some shares. Moving on to the next stock on the list is Stagg Industrial. Stagg Industrial is a monthly payer, and it's rare that we get buying opportunities on this one. So like I said, it's not that much of a dip. Let's see, 52-week high sits at around $31, $31.50, and I picked up some shares at around $28. So not a huge bargain, but whenever you have those high monthly payers, I'm talking about like 4% plus, especially if they pay every month. Like, I think it's important to be aggressive on those. Next stock on the list is Altria, and so this one is definitely controversial. Myself, I didn't actually want to buy this one because I don't like cigarettes, and that's kind of like a rule that I had. But to be honest, I just couldn't resist the stock price. Dividend yield is massive, somewhere around like 6.5% or something crazy like that, and they've been increasing it for a while now. The reason why I purchased it is because I think the massive run that we had from 2009 all the way to around the end of the middle of 2017, I think was just like astronomical, and it was a matter of time before we came back and retested some moving averages. We were around 64% above the 200-month moving average. So the fact that we come back, get a little bit close to it, like I have no problem with that. And I think that Altria is innovating both in the e-cig space and also the cannabis space. So I think they're at the forefront of a lot of research and development, and so I have no problem dabbling with them a little bit. Moving on to the next stock on the list, let's go ahead and just jump to Caterpillar. Actually, I think that might be a little bit interesting. If you take a look at it from a daily time frame, you can see that it is struggling a little bit. We've just been hovering around this area, and the all-time high here sits at around $170. Currently at $122, but it is a dividend aristocrat, and I have no problem with purchasing shares here. And honestly, if you guys are investing in Caterpillar, I would say don't be surprised if we head a little bit lower. I mean, I can probably draw a trend line right now that kind of, it gets a little bit hairy here. If this breaks, I could definitely see us heading lower. But we are getting close to oversold on the RSI, so we could see a short-term bounce here. But like I said, don't be surprised if we start to head lower with Caterpillar, as well as a lot of other these industrial stocks, such as 3M. Might as well look at 3M for a bit. So 3M also on the bargain. We actually made a new 52-week low recently, which is actually pretty impressive. But 3M is a dividend king, and they're still above their major long-term moving averages. 3M has been above the 200-month moving average basically throughout its throughout its entire history, and it's really only dipped below this 100-month moving average around the 2008 recession and around 2011 when a lot of other stocks struggled. So I have no problem with purchasing shares around this area, and I wouldn't be surprised if the bottom is very, very close to here for 3M. Next stock on the list is WBA, or Walgreens Boots Alliance. I think this one is actually at a now or never state as well. I mean, take a look at this. Throughout its entire history, we have never gone below the 200-month moving average. Always respected it, even in the 2008 recession. Always respected this moving average, and now we're there. Basically, the last time we were here was around 2012, which is like 7 years ago or something like that. It's possible to say that this move was overextended. Now we're getting a correction. We'll see what happens here, but yeah, I have no problem with taking a chance with WBA, and I do believe that it is a dividend king as well. So the current dividend yield is probably around maybe 3.5% right now, which is not bad. The next stock I want to talk about is let's talk about SPG. Actually, a lot of people don't like or haven't heard of SPG. It is a real estate company, however, and it went on an insane run here. Basically, since the 2008 recession, we went all the way up to $226 per share. Currently sitting at $155. SPG is actually pretty interesting because they increased their dividend amount per quarter, not just per year, but per quarter. And to be honest, I'm not sure how long they've been doing it for, and I wouldn't be surprised if they cut it during a time of a recession. But I think they were the best of both worlds, and I think that their portfolio is pretty diversified in terms of the properties that they own. So I liked them a lot. The next stock I'll talk about is Texas Instruments. So TXN is probably considered one of the most growth-oriented stocks in my portfolio. But the reason why I bought them is because I feel like we're close to taking off with Texas Instruments. So we did get this pullback here. However, I think we were close to around $130 per share. Came back all the way down to $116 per share. So I was happy to scoop up some shares there. And I do believe that they are a dividend aristocrat as well. Next stock I'll talk about is AT&T, which may not be considered that much of a bargain, at least in the near-term future. So if we zoom out a bit, when we take a look at AT&T, we can see that it's been on this trend line ever since the 2000 recession. So that's what, like 17 years of being above this trend line. Absolutely, I've been buying a lot of AT&T lately on M1 Finance. So of course, as we come close to this area, yeah, I'm gonna buy lots of it actually. Um, and so yeah, let's go ahead and take a look at Johnson & Johnson and then AbbVie, and we'll call it a day. So Johnson & Johnson, let's go ahead and zoom in a bit. Actually, I don't even think it requires that much. I think Johnson & Johnson is one of the most diversified medical companies out there, and it's not just like, consumer products that they have. They have investments in medical devices and pharma as well. So I think Johnson & Johnson is massively diversified, and we've been above this 200-week moving average for a really long time now. And so yeah, I have no problem with purchasing shares. Let's see, the all-time high sits at around $146, currently at 130, and around the time of August 6th, I purchased shares for about $130. So yeah, no problem with purchasing Johnson & Johnson. And then the last stock I'll talk about is ABBV. So AbbVie is actually pretty interesting. The only reason why I'm buying them, to be honest, is because weekly RSI is oversold, and I know that that's not a good reason to buy it, especially because we have broken below the 200-week moving average, but I just couldn't resist buying them. They are a dividend aristocrat, I believe, and yeah, like I said, I think they've been hit pretty hard lately, and I was willing to take the chance. And I think that their dividend yield might actually be close to around 6%, which is pretty massive. So taking a little bit of a chance on AbbVie as well. And while I have this tab open, why don't I walk through the rest of this portfolio? So it has been a pretty volatile week. Fortunately, I'm still up on the week, especially because of all the cash that I threw in there. As you guys can see, from August 5th to August 6th, the amount in this portfolio increased by about $1,800. So some of it went here, and some of it went to my monthly high dividend pie. So that's where I'm going to wrap it up. Thank you guys for watching, and I'll see you guys in the next video.